So good morning everyone and welcome to today's PAYE Modernisation webinar. So this webinar has been designed specifically for accountants and payroll bureaus where we will look back at PAYE Modernisation journey so far. To start off today, I'm going to introduce our panellists. So first up we have Paul Byrne, and Paul is the Managing Director at Thesaurus Software. After qualifying as a chartered accountant, Paul went on to set up and manage his own accountancy practice. Paul co-founded Thesaurus Software in 1991 with the goal of providing payroll software to Irish businesses. Thesaurus Software now provides quality software products that are used to process the payroll for over 200,000 businesses across Ireland and the UK. Thesaurus Software have two different payroll packages to choose from. There's Thesaurus Payroll Manager and BrightPay, both of which we will be discussing at some point during today's webinar. For part two of today's webinar, we will be joined by Ian Jenkinson, who is a Senior Sales Executive here at Thesaurus Software. Ian will take you through a quick overview of BrightPay Connect and show BrightPay customers how to activate your free cloud backup facility. He will demonstrate how some of our new automation and time-saving features can benefit you, your clients, and their employees. We're delighted to welcome our guest speaker, Sinead Sweeney, who is the PAYE Modernisation Change Manager at Revenue. Sinead is very much on the front line when it comes to PAYE modernisation and will also deliver a presentation today to discuss what has happened since PAYE modernisation has gone live and what challenges businesses are facing. So welcome, Sinead. For our Q&A session, we will have Paul and Sinead. And joining our presenters today, we will have Sandra Clark, who is a partner at BCC Accountants and council member of the Irish Tax Institute, and Audrey Mooney from the support team here at Thesaurus Software. All in all today, the presentations and demos should take just over 1 hour, so we'll try to leave as much time as we can at the end to answer any questions you may have, making up the 90-minute slot today. Just to note, if you do have any questions, you can type them into the questions box on your control panel at the right of your screen, and we will try to get through as many questions as possible. This webinar is being recorded and all attendees will receive an email later today with a link to the recording, so it's no problem if you do need to leave before it finishes at any stage. Also in the email later today, there will be a copy of the presentation slides that we're using today, or you can also download the slides right now if you wish on the Handouts tab on your control panel. Today's webinar is also CPD accredited, so if you wish to receive a CPD cert, please fill in the survey at the end of the webinar, or if you happen to miss the survey or cannot stay until the very end, there will be a link in the follow-up email later today, which will allow you to request a CPD certificate. So now that's all the housekeeping out of the way, may as well get straight into the webinar. So I'm going to pass you over to Paul for part one, PAYE modernisation 1 year on, was it a success? So thanks, Paul.
Thank you, Rachel. 1 year on, it feels like 5 years, I can tell you. I feel like I've aged 5 years since it all came about. Anyway, the introduction of PAYE modernisation, called PMod, in January 2019, changed the way employers and payroll bureaus submit payroll information to revenue. PMod has brought with it new and more stringent rules around when and how often we send payroll data to revenue. All employers, regardless of size, have to comply with the new real-time reporting system. First up today, I'm going to look back on the PMod journey so far. I'll also review some of the most common mistakes employers have made to date, and that flows easily in for me to talk about non-compliance and penalties. At the end of the presentation, I'll take everything we discussed today into account to decide whether or not we think PAYE modernisation has been a success. Before all that, I'm going to very quickly go back to the basics of PMod, and I will keep it brief, as you should already know this, or at least I hope you do. To do this, I have 6 quick-fire questions that I'm going to answer. Why was it introduced? Well, in a nutshell, so that revenue would have much more up-to-date information than heretofore, meaning that employees' tax credits would be much more accurate and employers' PAYE liabilities would be known much sooner. Also, it enables employees to view their tax record on my account in more or less real time. What is an RPN? Well, an RPN is like the old P2C file and contains the tax credits and cutoff points for all employees. Because of the direct link with ROS, these can be easily retrieved before each pay run. What is a PSR? Well, a PSR is what we called before a mini P35, which is submitted on or before each pay run. In most cases, PSRs are submitted either weekly or monthly. So how does payroll software help? Well, where payroll software includes direct revenue integration, this means that an employer can directly connect with revenue system from within the payroll software itself. This integration can help with both the RPN retrieval and the PSR submission. With regards to the RPN, if an employer is using payroll software, tax credit information can be retrieved and updated in the software at the click of a button. With the PSR, when payroll software is used, these submissions can be seamlessly created and sent directly to revenue from within the payroll software with just a few clicks. What does a new system mean for new employees? Well, looking at employees commencing a new employment, employers are required to notify revenue of any new employees, and this was a big downfall of the old PAYE system where employers were not registering new employees correctly. With PMod, employers can request an RPN for any new employees before they are paid, which can be done instantly from within the payroll software. So once an RPN is requested for an employee, the employment will be created on revenue's records, and an RPN will be made available with the new employee's tax credits and cut-off information. Similarly, for employees who are leaving their employment, once a leave date is entered on the payroll software, this leaver information will automatically be included in the PSR for the relevant pay period. How does the employer know the amount due to revenue? Well, revenue issues employers within ROS with a monthly statement based on the submissions made by the employer. This statement gives them a summary and breakdown of the total liability due based on the payroll submissions sent to revenue each pay period. When the monthly statement is available, employers have the option to view the statement, accept the statement, or amend the payroll submission. If no action is taken, the statement will automatically be deemed as the return. The employer does not need to manually accept each monthly statement. Regardless of the pay frequency, the revenue payment due dates and method of payment remains the same for all employers. If an employer paid revenue on a monthly schedule prior to 2019, they are still required to make the payment to revenue each month. Similarly, if an employer paid revenue on a quarterly basis, they are still required to make the payment to revenue each quarter. There's also a new option for employers to set up a variable direct debit, which basically means that revenue will take the required payment each month without you having to do anything else. So the story so far, pardon me. Now that we've covered the basics, let's look at the PMod journey so far. So it's now in full force, with the majority of employers having seamlessly transitioned to the new reporting system. From January until the end of August this year, some 172,000 employers have successfully submitted over 3.8 million payroll submissions in respect of over 2.6 million employees. I know Sinead has a presentation later on, and I'm sure those figures will be somewhat updated in her slides. So far, PMod has brought many knock-on effects and benefits to all stakeholders involved, employers, employees, and revenue. Direct integration, also known as APIs, enables different software applications to communicate with each other. In our case, it allows our payroll software to directly interact with revenue systems. Instead of the previous very manual routines of downloading or uploading, selecting file locations, logging in screens, etc., there's just one submit button to replace all of this. For employers, this integration has proven to reduce the actual workload required each pay period in comparison to the old PAYE system, bringing users time savings and a much more fluid experience each pay period. Employers are also saving time on the eliminated P forms. P60s, P45s, P46s, P30s, P35s are no longer required, but other than the P35 back in February of this year for the 2018 tax year. But going forward, there won't be any more P forms, obviously. For employees, one of the main objectives of PMod was to ensure that employees pay the correct amount of tax for the tax year. Employee tax records are now more accurate, especially for those with multiple employments, meaning less under or overpayments of tax and maximum use of their entitlements. In May of this year, Revenue turned their focus to employees. All employees now have full visibility of pay and tax information as reported by their employer through their My Account. At the end of the year, an employment summary or an employment payment summary, the name still has to be figured out, I think, will also be available through My Account, which will replace the P60. Employers should be aware that employees can now view any discrepancies between payroll details on an employee's payslip and those reported to Revenue. So it's therefore very much in the employer's interest to ensure that the data submitted to Revenue is accurate and in line with the employee's payslip record. I've been speaking to a few payroll bureaus and accountants recently to find out how they have found the new system. I think the general consensus was that the first couple of months were quite challenging. As well as implementing a new system, there was also the P35 deadline for the 2018 tax year, and along with the normal other deadlines, such as the VAT return deadline, all within the first few weeks. There was also the issue of educating clients and changing their ways. Simple things such as making sure that the client notified them of the payroll before they actually made a payment. Over the past few months, however, many are now starting to see the benefits of a more simplified process. A frequent comment from accountants was to do with net to gross and how they are noticing some employees who are allocating credits elsewhere, and the real-time reporting has highlighted just how expensive this can work out for the employer. Although both Thesaurus and BrightPay can cater for net to gross payments, we do not recommend, or we certainly recommend that it's avoided if at all possible. Other feedback I've received from accountants has been quite positive, with many feeling that it has made their jobs easier. The clients have been warned well in advance about the new rules, and it has cut out a lot of the toing and froing they would have had in the past. The timeliness and accuracy of the information supplied by clients has generally improved. Shortly, Ian here, who works with us, will show you how this can be made even better, where the client effectively enters the payroll details for you and where everything is logged so they can't blame you for any mistakes that they make. We rolled this out in the UK last year and already have hundreds of firms using it successfully. The story so far for employers processing payroll manually. Well, Revenue stats suggest that up to 10% of employers are still calculating and submitting their payroll manually. However, calculating it manually can now be very time-consuming, cumbersome, and prone to error. Each pay period, be it weekly or monthly, employers will need to log into ROS and enter all the required details for all their employees, a bit like manually completing a P35 each pay period. Now, I know certain of the screens are pre-populated based on what was entered in the previous period, but these are zeroized if there's a new RPN or there's any changes to in the gross pay of the employee. And there are a number of screens per employee per pay period, and no calculations are performed. So it's important to remember that failing to correctly comply with PMod will result in penalties or fines being imposed from Revenue. For these employers, for the sanity alone, never mind the huge time savings, it should become apparent that they should either be using the services of a payroll bureau, such as you guys, or that they should be using payroll software. Although there are a lot of benefits overall, any new system is going to have teething problems, and I think most of us have faced a challenge along the way, not just employers, but even payroll software providers and Revenue. For us, I'm sure you've noticed that there were quite a few upgrades in the first few months after the initial release, and this was because of the inability for us to test various scenarios properly. Revenue did provide us with a test system, but we weren't really able to test scenarios live on that system. One example of, say, an unexpected challenge we had during the year was due to regional settings. We had one customer who had the regional settings set to Swiss, and it picked up the decimal point as a comma, so the return was coming back as 100 times the liability in those cases. So looking at employers now, here on the screen I have the 10 most common errors seen by Revenue. I have Audrey joining me here. We're just going to go briefly through these to have a look to see why they might have actually occurred. In saying that some of Revenue's top mistakes that we're looking at here will overlap with some of the scenarios I'm going to cover in a few minutes. Anyway, the first one there is employers mistakenly sending the payroll data to revenue more than once. I think that might be because they may be submitting from the software and probably doing it directly through Ross as well, maybe logging into Ross and submitting. What do you think, Audrey?
Yeah, I suppose it's not something that you can do through our software to submit twice, because we will have the same line item ID, so it would be rejected on revenue side. But I think there possibly are some payroll softwares that generate a new line item ID. So in that case, then it would, you know, revenue would accept it a second time because it's different.
Okay. Next one there is employers incorrectly creating duplicate employments for the same employee. I think this would be mainly due to them maybe logging into Ross, creating the new employment, and also the software doing the same thing. So it's coming from two different sources. I think that's the reason that has happened. Yeah. The next one there is payroll submissions or parts of payroll submissions failing the validation process. But again, I think any of those issues we may have had would have been covered in our first few upgrades that came out during the year.
Yeah, I think they were identified very early on.
But they shouldn't be happening at any stage now.
I suppose it's worth mentioning, we did have a couple of them last week, but it was because people hadn't run our upgrade. Okay. So I suppose it's worth mentioning, you know, when we do release upgrades, that it is important to, you know, install them as soon as possible.
Yeah, literally the upgrade should take less than half a minute in most cases. Employers ceasing employment for employees in error by incorrectly including cessation dates in payroll submissions. Well, I gather that must be user error.
Yes, but there was also some of that where employees ceased it, you know, where an employee was maybe laid off for a few weeks and they ceased the employment, but the employer didn't actually know. So on revenue side it was ceased, but on the employer side it was still very much live.
Yeah.
And I suppose again, these were all things, again, it's down to, I suppose, different ways, you know, so many different ways of submitting information to revenue.
Employers failing to apply the most up-to-date RPN when running payroll. Again, I think this will come down to the user just ignoring the fact that they're meant to actually request an RPN each time. Employees being taxed on the emergency tax basis where an RPN is available. Again, I presume they're not actually uploading the RPN.
Yeah, or it could even be a timely thing that they retrieve the RPNs and then set up a new employee maybe, but don't, you know, check for RPNs again or something maybe.
Or it could be some of those initial, at the beginning of the year where there was problems with the employment ID.
Possibly,
and the employment or the credits and cutoffs were coming in under a different employment ID than the software had registered for them. Incorrect operation of emergency tax. For example, employee reported with emergency tax but no tax deducted by the employer. I think this might be the tax exclusion order.
Yeah, I think that was the instance that we had.
Yeah, because the default state we had for all employees was emergency unless we got credits and cutoffs. But when somebody on a tax exclusion order, we were just simply not deducting any tax, but we were leaving the default state at emergency on the PSR. So that has since been fixed. I think
the numbers on that would be quite low though as well. So there may be, I suppose, other issues that revenue know of, but they weren't related to our software, I suppose.
Gross pay shown as less than pay for income tax and or pay for USC. I think that probably mainly, in our case, it mainly relates to CE employment.
Yeah, I suppose revenue see quite a lot of this. I suppose we were all a bit surprised maybe about the emphasis on gross pay.
Yeah.
So I think, again, yeah, it'll be, many of these issues I'm sure will be gone for next year because we've all learned from them.
Well, I think in that one, that's always going to still be the case anyway. That will continue because gross pay will be greater than pay for USC or income tax with C. Am I not right there?
Yeah, but I think revenue are excluding the C schemes, but they're still seeing those issues happening. Now, maybe Sinead will correct me on that, but I think they're still seeing the issue, even ignoring CE schemes. So I think it's...
Okay. The next one there, no USC deducted where the employee is not USC exempt, and similarly USC deducted where the employee is USC exempt. I actually don't know how that one would happen.
No, we're not sure. We're confident enough it's not our software.
Employers paying their tax liability twice in error, e.g. by setting up both a Ross debit instruction, RDI, and a variable direct debit for the same payment period. Well, I suppose it is. I know from our own point of view, we have felt it has been a little bit confusing. The actual setting up of those direct debits for some employers. So I can see how that would happen.
And I think revenue changed some of their screens, didn't they, to try and make it more user friendly.
Yeah.
So.
Okay, thanks, Audrey. Just some of the issues that we've had, I suppose, to work through with PMod. One of the big ones for us was digital certs. This led to quite a few support calls, and there were different situations involving digital certs. Essentially, the employer's or agent's digital cert is required and needs to be installed on the computer for the API integration to work with revenue system. In the UK, employers just need to log in credentials, which works a lot more seamlessly. And so this is one downfall, I feel, of PMod. Then there's digital certs and networks. Where the cert is stored on a shared network, it was causing problems with users putting in their own cert, and they would need to keep installing the cert every time. In this scenario, you just need to install an administrator cert on each computer. And we have highlighted this on our website, and there will still be a few calls onto support about this. Another challenge with digital certs is there might be a certificate issued for an employer or agent where the cert isn't actually active on Revenue's API system until the following day. So this does result in quite a few calls into the support line. Another issue we came across is if an employer logs into ROS and makes entries or changes manually to a line item, for example, it doesn't sync back to the payroll software. So the software has no way to recognize that this change has been made, and it has caused some issues. It's important that employers avoid making changes manually and instead do them through the payroll software. Sometimes employers incorrectly created duplicate employments for the same employee where the employee was listed more than once on the RPN. This issue has since been resolved, but again, it was as a result of employers logging into ROS and registering a new employee online instead of through the payroll software. Some employers also found it challenging when there were multiple branches with the same prem. It was only in the first few weeks when the second branch submitted the PSR, it was showing up as duplicate line item IDs. To avoid this, employers with a number of branches needed to register for additional prems. This was expected, but unfortunately some employers were not aware that it would be an issue. Many employers noticed that some employees were put on emergency tax, and this happened where revenue was unaware of certain situations. Again, this scenario was resolved within the first few weeks. There was also the scenario where the RPN retrieved from revenue had incorrect details, or where the employer or payroll bureau recognized that the information included on the RPN was incorrect, and there was often a delay in getting the RPN amended as the revenue helplines would have been quite busy. There's some confusion over pay periods as well. The concept of pay date has been quite testing for many employers. The pay date is when the payment is actually made, and this is all that revenue is interested in. So a payment made, say, on the 5th of January 2019, even if it was for work performed in a previous week in December, should be included on a 2019 PSR. Many employers found themselves a week out of sync because of their previous misunderstanding. There was the issue from time to time of revenue downtime, or more correctly, slow time. In these cases, PSRs were being sent, but there was no response, so the software wouldn't know if it was successfully submitted to revenue or not. There is an easy solution in that you can check the records in the check revenue record utility, but it did result in a few calls to our helpline. There was also an issue with old Windows XP computers, as they are not compatible with the new security measures that are needed for the revenue integration to work. Although we did announce that we would no longer be supporting Windows XP users, it came as quite a shock to some customers that they had to go out and buy a new PC or laptop. Another factor in relation to the computer itself, we did also have a couple of calls about backups. It is very important to take backups of payroll data with PMod. If for any reason the computer crashed, for example, it can be very challenging to backdate the payroll data so that the periodic submissions to revenue are all synced up and correct. We have an optional cloud backup add-on for both of your payroll products, Thesaurus Connect and BrightPay Connect, and these will allow you to seamlessly back up your payroll data to the cloud. To help our customers with PMod, we gave all customers one free cloud backup with every payroll purchase during this year. Customers are issued with one free Connect license. The license key for Connect should be on your invoice for the payroll software. It is important to note that this does need to be activated and set up. There are many more benefits to the Connect add-on, and Ian is going to look at some of these benefits shortly. Moving on now to non-compliance. Non-compliant employers can expect revenue intervention with non-compliance penalties and fines. Where errors arise, employers should immediately rectify them to ensure that mistakes are not included in future payrolls. Early action can also reduce the possibility of revenue intervention. It's important to note also that if there is a constant pattern of corrections, or if there is a pattern of late submissions for a particular employer, revenue may take corrective action such as site visits or audits. Where an employer fails to engage with revenue or persistently breaches the PAYE regulations, it could result in interest due by the employer. The current penalty regime includes a fixed penalty of €4,000 for each breach of the PAYE regulations. It also includes a fixed penalty of €3,000 imposed on the company secretary for each breach. These penalties can be imposed on a per item basis, so you can see how these penalties could add up quickly. Perhaps Sinead may have some further details on the subjects of penalties and fines. The impression we are getting is that revenue has not been actively imposing fines so far. Their priority seems to be more directed at interventions such as site visits where they see a constant pattern of errors or delayed submissions. In other words, they've been trying to help and educate employers as much as possible. But again, I would imagine that this approach will not continue indefinitely, and we can expect to see the fines regime starting soon. So, can it be considered a success? Well, I think taking everything that we discussed into account today, I think that PAYE modernisation can be considered a success. Although we did look at many challenges, any new system is going to have a certain level of issues until it is fully bedded down. The first couple of months were very challenging for employers, for payroll bureaus, for payroll software providers, and even for revenue. But in the few months since then, I think we are really starting to see the benefits of the new system. When we compare it to the UK system, there were some very distinct challenges. The UK uses cumulative submissions, so any corrections to previous periods are simply adjusted for in the latest cumulatives, whereas in Ireland, a correction submission must be made for the actual period itself. The UK used much simpler authentication, whereas in Ireland, we had to grapple with digital certs. In the UK, there was a pilot year where employers could voluntarily use the new system. In Ireland, it was the Big Bang approach, and the test system provided for developers did not adequately handle real-time scenarios. Also, and very importantly, in the UK, submissions can only be made by payroll, whereas in Ireland, multiple sources can affect the online record. Often, as a result, payroll and ROS will be out of sync. This has also caused huge grief in the areas of employment IDs. There is one more hurdle ahead that could cause some issues, and that's December/January this year as we go from one tax year into the next, but hopefully all will go smoothly there. Also, developers, revenue, and all the relevant stakeholders will be keeping their fingers crossed and hoping that employees' year-end statements do not highlight any fundamental issues with payroll submissions made during the year. So that's it for my part of today's webinar, and I'm now going to pass you over to Ian, who will discuss how BrightPay Connect's client cloud platform can really help you.
So, thanks very much, Paul. So I'm going to cover the BrightPay Connect product, which, as Paul pointed out there, is available for both Thesaurus and for BrightPay itself. Yeah, and the software itself is adaptive, and it's an add-on module to BrightPay and Thesaurus. And by having it sits alongside and provides a wide range of services and facilities for your clients and their employees and single directors as well. And from the off, we'll just say that here on the left-hand side, you can see that there's an app, a free app on the App Store that's available to download. You can check it out afterwards on the App Store. And all the software is adaptive. So no matter what media your clients or your good selves are logged in from, the software adapts automatically to the screen type that you are logged in from. So the way it works is that when you purchase your Connect licenses, you redeem them onto your computer, and I send you very simple steps to do that as part of purchasing it. It's very easy to do and so intuitive. So then as a bureau, you take those licenses and invite on the clients, the companies of your clients, your selected clients that you want to bring onto the portal. And when you do that, once you bring the companies onto the portal, then you actually work with your clients, those selected companies, and they give you the corresponding email addresses and whatnot of the people in their employment who need to actually come onto the portal in order for the company to avail of all of the features and benefits of Connect. And then in turn, your clients bring on their employees onto the portal by sending out a single invitation. It is so easy to do, and I'll show you how to do it now in the coming minutes. And that's enabled, the clients are enabled to do that because as a bureau, you have already put in the email addresses for all of the employees, and on the employee tab over on the right hand side, under the HR tab, there's a little tick that you tick for self-service access as well. And therefore this simplifies the whole process for your clients to come onto the portal. So we're going to cover the bureau screens now, and here is a site that you're more than familiar with. It's one of the clients that are on BrightPay itself, and this particular company up here is called The Observer Limited. And in the cloud there, because they're on the Connect portal now, the green cloud here is green, and if I click on it, it brings up the small menu. So we've got on the right hand side is where you have access to all of your backups, which happen every 15 minutes. And again, when you're logging out of any account that you have on the Connect portal. So the beauty of that is you never, ever have to worry about having a backup of your client. The center one here is just where you can check all of the email addresses for the employees, and also the ability to, when they're they to receive their payslips on their smartphones. And if I click here on the one on the left, it takes you directly to your dashboard. So this is the bureau dashboard for Connect, and you're on the cloud here, so you can actually bookmark this on the desktop PCs or on your laptop or iPad, just so it gives you huge access to information when you're out and about and not in the office. So here you can see all of your clients all listed here. And whether there's 6 of them, as you can see on the screen here, or whether you have 600 or 6,000, you can simply click in the name or write in the name here in the search bar, and it takes you quickly to them. Yeah. Next tab is the users tab. This is where you as a bureau are in charge of everyone who has access to the Connect information online. So be that in your own employment or be that in your clients. So if I click here on add, you can see there's 2 types. There's the administrator, as you can see here, and there's the standard user. So an administrator is typically you or one of your colleagues in the bureau, while a standard user is typically someone who works for one of your employers, yeah, one of your clients. So if I click here on Alan Sawyer, for example, you can see that Alan works for a pretend client of yours called Alan's Auto Repairs. He's clicked to be a standard user, as you can see here, and if I scroll down a little bit further, you can see he's also ticked to have access to the confidential information and also the payslips and reports. And this one here is important, and I'll mention it at the end, approves the employee requests. I'll come back to that at the end of the presentation as well, so it's quite important. So, and any departments that you've set up in BrightPay will also flow through automatically here. So if there's no department set up for this particular client, then no departments appear here. The importance of having the departments gives you huge flexibility, because if you want to set up a user, another user, say, that only approves holidays in the administration department, for example, you'd simply tick the administration department as well as the approves employee request. So again, this whole functionality here just gives you huge flexibility to set up users for your clients. Yeah. The next tab and the final tab for bureaus is the settings tab. This is where you get a chance to, I suppose, customize your landing page so that every time your clients are logging in to Connect, it's actually your logo, the bureau logo that they see. And this helps you to develop the business and to further develop the working trust between you and all of your clients. So now I'm going to ask you to I suppose, put on your hat and pretend you're actually one of your own clients. So we're going to now experience some of the screens that your clients will actually, and the functionality that they'll be able to enjoy when they're on the Connect portal. So when you send out the email, the batch email to all of your clients, within that email, there's an active link. And when they click on that link, this is the screen that it takes them to, where they simply put in their address details, confirm their password, and agree to the terms and conditions, and click submit. And this is the portal. This is the Connect portal that all of your clients will have. And I'll step into each of these tabs here very quickly now so that you're fully aware of the capabilities that your clients will have. So don't forget, your clients now are on the cloud here, so they can actually bookmark this on their PC or their laptop or iPad, or even on their smartphone if they want it. It gives them huge flexibility when they are out and about as well, and not in the office or even after hours as well. So this particular sample company that we're logged in as is Allen's Auto Repairs here, and here's their dashboard here. So you can see here, here's the holiday requests popping in here. Here's the payroll requests, but again, we'll come to that now in later. We see the employer details are here, and the amounts due to revenue actually pop up here, which is a very handy feature, and I'll get into more details on that when I get to this section here under revenue. And then the upcoming leave also just pops up here within the company. Behind the cogwheel here as well is where is the audit trail for the holidays. So if I click here on this, your client can actually view on when were holidays approved for various employees and who approved them. And if they were rejected, by the way, the holiday request rejected, this would simply be red. So it just gives them a very handy central feature. But again, I'll get more into the holidays when we get down further into the calendar section here on the presentation. Yeah. If I click on employees, the client here has access to all of their own employees wherever they are, because whether there's 6 of them, as you can see on the screen again, or 600, 6,000, this doesn't make a difference. There's a search function here to get direct access to any one of their employees. The hand-ins to that is you can get in to check addresses or to check their payslips, or actually get into their calendar to actually mark up statutory leave or to change various contents on their calendar as well. Yeah. And this is the tab here that makes it very simple for clients to invite all of their employees as well onto the portal. And as I mentioned earlier on, this is enabled because you have set up all of the employees with their email addresses, and they've also been ticked for self-service access on the portal. So it all makes it very, very easy and intuitive to use for clients to invite their employees onto the portal. So the next tab is the Reports tab. This gets into the real self-service capabilities for BrightPay Connect for your clients. Because as you can see by these reports, you have done all the work on these as a bureau. And not only that, you might have some clients that only want access to certain reports, and that's capable to do as well. You can actually select what reports, so you can bespoke this presentation in relation to how they want to view or what reports your clients want to view as well. And by having Connect gives your clients access, 24-hour access, 7 days a week to all of their reports. And as well as that, they can customize them a little bit in relation to targeting exactly what your clients are looking for. So if I click on payroll summary, for example, your client can actually select the time period that they are looking for, and also what employees, if it's all of the employees or individual employees that they want to run a report on. So in this example, I'm going to run the report on all of their employees and run the report. You can see here, there's all the details, has flowed across from the bureau through the Connect portal and made available to your client 24 hours a day. And they simply right click on this, or they can download it as a CSV file, whichever they want to do. Yeah. The next tab is the calendar tab. This is where Connect presents a very central graphical overview for all of their employees, so they can very quickly check the status of holidays and sick leave. So this is statutory leave, the green, this is sick leave, and this is authorized leave. And if they hover their mouse over any one date, for example, it comes up automatically with the person who's on sick leave, for example. So very handy feature for clients to have, because they can quickly go into this to check the status of holidays before they approve other holidays for other colleagues and that, or they can check just trends on sick leave and whatnot in various departments. So it's quite a handy feature. The next tab is the revenue payments tab. This is where, as you calculate in the bureau the amounts due to revenue, this gives a very, I suppose, from a best practice governance point of view, it presents the facts and figures in a very open way with your clients. And as well as that, saves you from chasing and emailing them, because at all times, an email can go out to clients reminding them to log into their Connect to view their payments due to revenue. Yeah. And if we click on documents, then the next tab is, this is where, when the client has Connect, it presents a document distribution portal to all of their employees within their company. So they can distribute any document they want, either company-wide, department-wide, or to individual employees, as you can see here. Here's individual contracts, for example. So they simply click here to add a document and distribute it. So it's a really, really powerful tool for clients to be able to distribute, particularly if they have staff that are on shift work, or maybe they have employees who are out on the road as well. But if in any case, if they needed to get a company-wide announcement out to all of their employees, Connect is the perfect platform to do that. And behind the eye icon here is also monitors actually who's actually looked at it. So if it's, for example, a new health and safety procedure that all employees must read, then the clients can actually check who's actually read the documents. Yeah. Next tab is the settings tab, and this is where your clients can view their own details. This is where they can set up the notifications for what type of information is to flow to the self-service feature on the smartphones. This is where some clients may prefer, they can turn off the calendar if they want, or tweak the amount of information that's available on the calendar. So it gives them huge flexibility. So for example, if I click on the employer details here, this is where your clients upload their own logo. And the beauty of that is it doesn't override your logo. It simply means that when their employees are logging in, it's actually their employer's logo that they see. So it helps, I suppose, in this day and age, retain employees and whatnot, because it's a very powerful feature that clients will be offering to their employees to be able to do so much from the palm of their hand regarding their holidays and view documents and pay slips and everything. So it's good that the employer gets the kudos for that. So the next set of screens and the final set of screens that we look at now are the employee screens. So when the client invites their employees onto the portal using the simple email that I showed you earlier on, it has an active link in it too. And when the employee clicks on that active link, this is the screen that it takes the employees to. And you don't have to worry either about passwords, because if employees start forgetting their passwords, it saves you from being chased for passwords, because the technology looks after renewing it very simply. We just log in. So this is the portal here with the 4 tabs for employees. You can see here this particular employee example we're looking here is Matthew, and Matthew, you can see here are all the pay slips. Here you can see there his employee details and his upcoming leave, and very handy here he can quickly view how many days he has remaining and how many days he has taken in his holidays. And as his pay slips pop in like this onto his dashboard, he will also get an email into his inbox, his standard inbox. And if he hovers to the click here, as you can see, it takes him securely to BrightPay Connect to view and access his payslips. Yeah. So the next tab is the Documents tab, and this is where there's 2 subheadings here, by the way. There's Payroll and there's also HR Documents. So in the Payroll, you can see here every employee, in this case Matthew, here are Matthew's, all of Matthew's payslips in a library, all here in the one place. The beauty of that is that if Matthew or any other employee has applied to the bank for a mortgage or a car loan or a big personal loan or anything like that and needs payslips, he can quickly log in and print these off himself, access them like this. Here's all the details. They flowed across from the bureau straight to his application on the smartphone, so he can just print these off or download them. And the beauty of that is it saves him from chasing his employer, because don't you know, the employer in turn will chase you looking for payslips. So if I go back into Documents, you can see that the second tab is the HR Documents tab, and this is where any specific document, so in this case it's Matthew, so here's Matthew's specific contract or his company handbook, general information, or again, if there was any other documents that his employer deemed necessary for him to have access to, like health and safety or anything else, this is where it would be available for Matthew in the palm of his hand at all times, night or day, 24 hours a day. The next tab is the Calendar tab, and this is where every employee can quickly view their holidays. Have they been approved, or if there was sick leave registered against Matthew, it would be shown up here as well. So if Matthew wants to put in for some leave, you would simply click here on Request Leave. And in this case, it's going to put in for a couple of days off here from the drop-down menu. Very simple. You could put in for annual leave, or you could put in for unpaid leave as well if he's ran out of holidays as he approaches the end of the year. And also it can be put in for full days or half days, AM or PM. And here's a feature here as well. I noted earlier on that when you set up employees on BrightPay Connect, you can also allocate them a certain number of days holidays. And from then on, BrightPay Connect automatically looks after reflecting the number of days that have been taken and how many days are left. So it's very handy if any employee quickly sees a great deal over the weekend in the newspaper, something like that for a holiday, they can quickly whip out their phone, see have they got enough days and put in for those days there and then. So in this case, Matthew is going to put in for 2 days off and submit the request. It'll automatically pop up here on his employer's desktop in Connect, where they can be rejected or approved. If they're rejected, by the way, the employer can put in a quick note just to say why, apologize to Matthew and tell him, ask him, will you take another couple of days off? But if it's approved, they simply disappear off Connect and immediately pop up on the smartphone of the employer, of the employee, I should say, as the 2 days leave accepted. So it's a really, really powerful feature for employees to have. The last tab then is the My Details tab. This is where BrightPay Connect offers a platform to employees to keep all of their address details and their phone numbers up to date at all times. And the beauty of that is when they change their address, it flows through to, do you remember earlier on in the presentation I told you about the employer setting up somebody who approves leave from colleagues? Well, that's the person that gets this, and when they approve it, it automatically updates the Bureau database. So it saves you a ton of time updating addresses. So if this person, Matthew, moved to a new house or anything like that this evening or over the weekend, they can simply whip out the phone, update their details. So it's really, really powerful. So the next few screens are just a demonstration in relation to, here's what the logo actually looks like on BrightPay on the App Store that you can free to download to take a look at it. And you can see here that it's, as the payslips then pop in, you can see here that Alan's Auto Repairs, the payslip is made available, so the employee gets a notification immediately. So here you can see, here's the home page and the employer name and everything and the number of days that have been used and remaining. And if I click on the documents, then you can see here, here's the payroll documents that I showed you earlier on. So here's all of the payslips, all located in the one library for every employee. Yeah, and then if I click on calendar, you can see here that here's the calendar and here's the approved leave that every employee can see very quickly, and they can very quickly put in for more holidays by clicking the plus button here and putting in for more holidays. It's so easy to use and very intuitive, and My Details available for all employees at all times, so they can see check their address and details, and again, if they need to change them, they can very, very quickly do it. Yeah. So the final section I'm going to talk about here is a new section it's a new feature coming out for BrightPay Connect in Ireland. And as you can, it has, as Paul mentioned earlier, it has been released for a couple of years now in the UK, and it's proving to be hugely, hugely successful, and we've no doubt it will be equally successful here in Ireland. So when it's time to do the payroll request, the Bureau would simply click here on New Request. So you can actually click here to do a payroll request. And when you click on this feature, Connect actually pulls out the last payroll that was done for this particular client and presents it to the client. So therefore they can check it or make changes to it on an employee by employee basis, or they can actually even just put in the comments box below, they could put all of the instructions in there. The beauty of that is it captures all of the information and the requests between the payroll run in the one place, and it's captured in the audit trail, the same audit trail that you access and the same audit trail that your client accesses, because you can see it here that there was any comments left. And as the payroll comes back in, it enters into whichever field it is. So when it's sent out, it's entered here in that it's recently completed or recently that it's waiting for a response, as you can see. Yeah. So in this case, after you make all the changes, you can then send the very latest payroll to the client under the approval process by clicking here. And then this is the dashboard for the client gets, and you can see the payroll has come in for an approval. They will also get an email into their inbox. So your client simply clicks here to view it. So what you've given them here is you're actually presenting the payroll to them in a very transparent way that they actually can approve it visually before you actually pay their employees. So it gets buy-in and thereby protects you as a bureau and thereby protects your clients as well. So if something is not right, if the client wants to click here, they could put in a note just that goes back to you before you run the payroll, or if it all looks okay and they're happy with it, they simply click here and it's done, and it comes back in as the response received in the audit trail, all time stamped right down to the second. And again, it's logged in the audit trail. So if there's any SLA meetings in the coming weeks or months regarding why the payroll has gone up or anything, both you and your clients can actually view the same instructions that you received from your clients. So it's a really, really powerful feature. And again, it's coming out in the near future. So again, we've every confidence that it'll be a huge success here as well. So that's it. Just finally, Jen, just to cover pricing, if there was only one client involved, it would be £59 per tax year. And again, the economies of scale kick in quite quickly, as you can see here. And again, just to say that next year, in the next fiscal year, that the pricing will change to a usage model for Connect, that is. So in this example here, if there's only one employee involved using the Connect product, it would be 50 cents per month. And again, in the next example, if there was 10 employees, for example, it would be €3.90 per month for Connect usage. Yeah. So that was just a very quick scan of the new features and benefits for Connect, for Thesaurus and for BrightPay. But again, highly recommend that you book a more detailed demo with us, with myself and Tim in the coming weeks, and we'll be only too happy to step through it in far more detail. So I'm going to hand you back to Rachel.
Perfect. Thanks, Ian. That was great. It was good to see the new features that'll be coming down the tracks for bureaus. They'll be a very handy feature. So now we're going to pass over to Sinead. So just bear with us a second now. Now I'll pass over to you, Sinead.
Good morning, everybody. I suppose some of what I'm going to cover this morning, Paul has touched on, but a lot of it really is still very important information. And I suppose back to when we set about starting the whole PAYE modernisation process, we had some very clear design principles for employers, for employees, and for ourselves in revenue. And on the screens there, you can see I've just put some little time balls in there in terms of where we are with the process to date. And I suppose now we're 9 months in, and we have absolutely seamlessly integrated the processing of the payroll with the revenue system. And for the majority of employers, the feedback that we're receiving is that this has been absolutely beneficial in terms of time savings and actually getting a lot of their clients to be more compliant. We certainly have abolished all of the P forms, so that administrative burden has been reduced in terms of having to constantly fill out forms and return them to ourselves. We are certainly seeing that the tax is being paid and there's been no change to the payment dates, and ultimately all of that is resulting in time savings for employers. For employees then, and as Paul said, we have switched our focus to employees since May of this year. We have enhanced the facilities for online services for employees. We certainly want them to maximise the use of their entitlements, and in 2020, we're going to carry out an automatic end-of-year review for all employees. Employees now have access to real-time accurate data. They can go on and view what the employer has submitted on their behalf as it actually happens, and it gives them a level of transparency that they haven't had to date. And that's actually very important because, unfortunately, in our economy, we do have rogue employers who are deducting PAYE and PRSI from their employees, but not actually paying it over to revenue. And it generally only comes to light when somebody comes into ourselves to maybe make a claim or goes to the Department of Social Protection, maybe looking for an unemployment benefit. Suddenly they realise nothing has actually been paid over on their behalf. For ourselves in revenue, well, the statutory in-year return is happening on a monthly basis. We certainly feel it's making compliance easier from our perspective because we're now able to go in every month and review what the employer has submitted. And if we see that something is inaccurate or maybe that they've missed something, we can contact them immediately rather than calling out maybe 2 years later and trying to rectify a problem that has probably grown in that period. We have accurate income details from employers, and we can certainly see a reduction in customer contacts from the employer's helpline side. Certainly in the first 3 months, the employer helpline was extremely busy, but those calls have certainly eased off now. Timely targeted interventions is not where we're at, as Paul mentioned, and it's not something that we have been actively involved in. Instead, we have been looking at the quality of the data, and I'll speak about that in a couple of moments. So I suppose just following on from some of the statistics that Paul gave you earlier, we currently have about 6.1 million RPN requests made by employers, and that represents about 175,000 unique employers. We've seen 4.4 million successful payroll submissions, and that represents over 2.8 million employees. The number of unique employments it represents is 2.9 million, because some people have more than one employment, so they are being recorded as another employment on the system. We are seeing a range of payroll sizes being successfully submitted since the beginning of the year, from the largest right down to the smallest person who has maybe just one employee. So just moving on then and covering some of the issues that Paul mentioned in terms of the common mistakes and errors that we're seeing. We have a dedicated data quality team, and they have been reviewing all of the data submitted by employers, and they are reviewing them under 12 key data issues, and some of those Paul has already touched on. Where recurring issues have been identified, the team have been working with both the employer and the software providers, if it's a software issue, to try and rectify the issues. And we have asked the software providers in some cases to maybe look at their software and see, is there something that they can develop or add into their software to allow for maybe what the employer is trying to do, to allow them to let that happen. So the common issues that we have identified certainly are emergency tax basis, where somebody should be paying emergency tax, but actually they're not paying any income tax. Emergency tax basis, but there is an RPN available and it hasn't been used. Where the gross pay is less than the pay for income tax, where the gross pay is less than the pay for USC. They're USC exempt, but the USC has been paid. Where the pay date is actually before the submission date, which again would be in contradiction in terms of the requirements under PAYE Modernisation, because it needs to be returned to us on or before the person is paid. And then somebody having negative gross pay. Also, where the pay for USC is not equal to the pay for employee PRSI. Again, Paul already touched on this, duplicate pay items. No PPSN provided and the person is paying less than 8% USC, and under the new rules where no PPSN is provided, the person is charged at 8% USC, and they're also charged at the higher rate of income tax. So again, no PPSN provided, but the incorrect rate of income tax being applied. If there are issues with any of those, the historical line item data does require to be corrected. So we have been holding review meetings with the majority of the software providers, and certainly we've asked them to review their validation process and engage with their clients, particularly if the clients are not following the procedures correctly. We've also been carrying out on-site visits to employers where we've been trying to assist them with the issues and the errors. So the errors need to be rectified by the employer, because the employees are now able to view their information, and they should be able to reconcile the information that they can see on their payslip with what they can now view through My Account. The information reported by the employer will be included in the employee's end of year statement, and this is the statement that may be used by the employees if they're going for a bank loan, or maybe looking for a HSE grant or a local county council grant. So it's very important that the information is correct. So in terms of other issues that we've identified, and certainly Ross Digital certs, expiration dates on those, it's very important to ensure that they're monitored. We do send an email telling somebody that their Ross Digital Cert is due to expire, but sometimes people ignore that. And we certainly know there were significant numbers due to expire in September. So if your Ross Digital Cert is about to expire, please make sure that you re-engage with Revenue and get that cert back and up and running. Registering employments with Revenue, again, Paul touched on this in terms of the duplicate employments. So the obligation still rests with the employer to register an employment, and that's now done through the payroll software system. The only time the requirement rests with the employee is where they are a first-time employee in the state. So the employer should register the employment by submitting a new RPN request for that employee. Employees can go on and register the employment. Obviously, they have to do it if it's their first employment in the state, but they can go on and register the employment themselves. Initially, in the early days of the system, that was causing a duplicate employment to be created, but we have worked on a fix for that, and that should be in place now. So end of year changes, and I suppose these are very important in terms of the employees, but certainly both payroll bureaus and employers will be getting questions from their employees about this. So the first issue that's going to hit them in 2019 is that they're not going to get a P60. So there is no obligation on the employer to provide a P60, and 2018 will be the last P60 that they will actually have. We will make a P60 replacement available. We're currently calling it Employment Details Summary, but we're still working on an actual title for it. And that will be made available to all employees at the end of 2019. And that will contain details of all of their earnings for that year from all of their employments. And that statement can be utilised in the same way as a P60 for income verification purposes by the banks, lending institutions, the HSE or county councils. We are also launching a facility to securely transfer information with a password to relevant third parties, and that will be available shortly. So that's where an individual can go on and get their end of year statement and their last 3 payroll submission details and securely send that to the lending institution or the relevant third party that's looking for that information. So this is just a draft of what that P60 statement is going to look like, and at the moment we're still working and refining that, but it's just to give you an idea of what it's going to look like. So in this case, this person has had 2 employments, so you can see there all of the pay, income tax, USC and LPT and PRSI details that have been deducted for that person. The end of year statement, this will be made available from the 15th of January 2020, and it will be based on the income details reported by all of the person's employers during the year. They will be able to accept the preliminary statement if they're satisfied that the information is correct, and if it's balanced. I think we've missed a few words there, but if the statement is balanced, there is no need for them to do anything, and the statement will just say that it's balanced. Additions, amendments and corrections can be made by submitting an e-form return. So I'm going to show you some screenshots of how that's going to look. So when they log on to their preliminary end of year statement for 2019, on the left hand side there's 4 options: overview, PAYE, USC and accept result. Now the language is there in Latin at the moment because it hasn't been fully signed off just yet. So you can see there the income tax due, the USC due and the total tax due for this person. You can see then the tax that was paid, and in this case they have an underpayment. And if you go in then down the bottom, you can see view income tax calculation, or if they're happy that that underpayment is correct, they can simply accept the statement. The screenshots that I have here will actually follow down the page, but just for viewing purposes, I've put them side by side. So when you click onto PAYE, you will see where the person's employment income is coming from. So this person has 2 employments. They also have other income coming in from the Department of Agriculture. They then get relief for a PRSA that they're paying into. So their total pay for income tax is 90,000. You can then see the breakdown of how their income tax is charged, less any credits and reliefs that they have, giving a total income tax due of 25,640. If we move over to the right hand side of the screen then, you can see the income tax that was paid on the employments, but that there's now an underpayment of 4,000. possibly arising from the fact that that Department of Agriculture payment maybe hadn't been taxed. So the preliminary PAYE result is that this person owes us 4,000. Then when you go onto the USC screen, it calculates the USC and breaks down into the various USC rates in exactly the same way as the tax rates are calculated, and then it gives you a preliminary USC result, again showing an underpayment because obviously there's a USC amount missing, and again possibly on that Department of Agriculture payment. We've just put this up really as an example to show you how it's going to look. So then when you go to the preliminary end of year result, you can see the total tax that's due, the total tax that was paid, and then you can see that this person has an underpayment. In the box then it says you have an underpayment and the amount is stated. If you wish to pay, you can do that there and then using the payment services in My Account. If you don't pay it, then your tax credits and rate bands will be reduced for the next year. So again, depending on the amount that's involved there, it might be more beneficial for the person to actually make a payment rather than have their tax credits and rate bands reduced on an ongoing basis. If they're happy that everything is correct, they simply check the box to confirm and they sign and submit it. So since mid-May, employees have been able to view their information on screen in the My Account facility. So to date, we've had nearly 200,000 payslips accessed, and that's from about 85,000 employees. So we haven't actually advertised that facility. So the fact that people are actually going on and reviewing the data is actually a very welcome departure, because people are going on and using My Account. We do have a unit managing any of the issues that are referred to us by employees, which are of a compliance nature. So for instance, somebody might log on and they actually can't see that their employer has returned anything, but maybe they have a payslip that clearly shows tax and PAYE has been deducted. Those are referred to us, and there is a facility within My Inquiries and also on the system that allows them to report any discrepancies. In the majority of cases, they should contact their employer firstly, and then if they don't get a satisfactory response there, then they need to forward that on to ourselves in revenue. When they log on, this is what they're going to see. So if they just have one job, they'll see ABC Limited, and that's the active job. They then see whatever tax credits they currently have. And when they go into the active job, this is what they're going to see. So the details in terms of the employer, and then their pay and tax details year to date. And then down the bottom, you can see that this person is monthly paid, and this is the view that they'll have of each of those monthly submissions from their employer. You'll see there are three little infographics beside gross pay, pay for income tax, and pay for USC. And that's because we know a lot of people don't actually understand what goes into making up gross pay. So if they click on them, they'll get a little explanation of what goes into making up each of those characters. And then there are some learn more links which will bring them in to more detailed explanation on the revenue website. When they go into the actual monthly payroll submission, they can see the amounts that have been deducted, PRSI, USC, if they're paying LPT, and that should mirror what's on their payslip. There is a little icon there for reference details. So if they have an issue with something on their payslip, they can quote that reference detail to their employer, and their employer should be able to find that payroll submission and either correct it or explain what has actually happened. So in terms of the information that's now being transferred to financial institutions, that facility will be live in the coming days, and really it is a secure method of transferring pay and tax information to a financial institution and other relevant third parties. So the individual employee can log on to My Account and get a PDF of their information, which they can securely send with a password to the institution that's requiring that information, and that will be live in the next couple of days. In terms of actually going in and reviewing their pay and tax details, they can go back in and review details back to 2016, and you can see there it's quite easy, it's step by step. If they're looking to add something to their Form 12, if they want to go on and see their end of year statement, or get the employment details summary, which is the replacement for the P60. Now, they're draft screens at the moment. I've just put them up there so that you have an idea of what it's going to look like. When they click on view, then it gives them a view of what their detail is going to contain. So again, their pay for income tax, their USC, and then the actual job that they've been working in, the start date. If they've left in 2019, the leaving date will be there as well. Then this is their job pension details, and again, if any of the information is incorrect, you can see there's a button there that allows them to report the issue to revenue. So again, they can see all of their payroll submissions. They can go in and check whether the detail is correct or incorrect. And that's just again showing you the payroll submission. So each submission will look like that. So if they're weekly paid, obviously at the end of the year there'll be 52 weeks payroll submissions there. Under the employment details summary, then again it shows the employer details and then the pay tax, USC and LPT that has been paid. So because these are draft screens, don't take any heed to the actual monetary amounts that are there. We've just populated them so that we can show you what it actually looks like. And again, this little box pops up if they want to report something that's incorrect. So in terms of our ongoing engagement, we are currently involved in a lot of employee sessions where we're calling out to employers and having a 1-hour session with their employees, explaining the changes that are coming and also encouraging them to sign on and to use the My Account facility. We'll also be attending the iPass annual update days, and we have about 32 of those days to attend. And I know a lot of the people who are probably online today attend a lot of those iPass seminars. So we will be going through the latest screens and hopefully everything will have been signed off at that stage. We are focusing on employees and we have commenced engagement sessions with employers, government departments and public bodies. We held 2 sessions over the last couple of weeks in public libraries where we've just asked members of the public if they'd like to come along and to get an explanation of how My Account is working. We have another session scheduled in Tullamore in October, and after that then we may roll that out into libraries all across the country, depending on the attendance levels. We are also available to visit employers on site to provide a session for their employees. So if anybody would like us to do that, I've put the contact details there on the screen. We're offering a lunch and learn session, or dependent on the numbers, we can attend for a day maybe and do several 1-hour sessions in one day. We have a huge amount of information both for employees and employers up on the website. So for employees, the information is in under jobs and pensions, and for employers, it's in under employing people. And the 2 helpline numbers are there as well if anybody needs to make any further contact with ourselves. So I'll hand you back over to Rachel.
Thanks, Sinead. That was a very good presentation there. So it's now time for the questions and answers, and there are a lot of questions that have been sent in already. If you do have any questions about the webinar, feel free to type them into the questions bar and we'll try to get through as many as we can. Joining all of our presenters for today's webinar, we are joined by Sandra Clark and Audrey Mooney will be back in again as well. So if you could just bear with us for a few minutes while we get set up. I just want to switch the screen while we're muted here for a few seconds. Just a few of our upcoming webinars, just so you'll know the upcoming dates within the next few weeks. So back in a few seconds.
Okay, welcome back. We could start, Audrey, start going through the questions now.
Okay, so I wonder, yeah, okay, so there's quite a few in, so we'll get through as many as we can. So the first question there is just when an employee leaves and joins again, how do you adjust for the correct credits to come in under the correct employment? Do you want me to answer?
Yeah, please.
Okay, suppose when an employee leaves, you know, the leave date is put on the submission, so revenue know that the employee has left. When you re-add them to the software, then we increment the employment ID, which tells revenue then this is a new starter, so effectively you're registering that new job. So if the allowances haven't been
still available, yeah.
Exactly, yeah. If they haven't moved to a different employer, you know, they'll automatically then transfer over to this new employment. So it's all quite seamless really, unless Sandra, you have anything to say now when you're actually doing payroll for real?
No, yeah, it is normally seamless. I suppose the issue is that obviously if they've moved on and then come back again, sometimes just it mightn't come through straight away, it could be issued with 0 credits.
Temporarily, yeah.
Yeah, and it could be because the previous employer maybe hasn't ceased them.
Timing,
So the credits are still sitting with the previous employer.
Okay. Somebody's just asking, will corrections last into next year, or will they just be temporary?
Will they last until?
I suppose you can correct forevermore,
Yeah,
but
Absolutely,
maybe won't
you
be
can go back and
penalised.
correct, and the correction will still be visible on the system, on the revenue system. So every correction is held on the system.
Okay. This is a question for Sinead. We have come across an issue recently where clients on PAYE direct debit have had their tax clearance rescinded because there may be a shortfall in the amounts owed on a monthly basis. Previously, the direct debit at PAYE would even out at the end of the year, and anything owed would be paid on the P35. So this no longer appears to be the case. Is paying by direct debit now defunct?
No, I know there was a glitch earlier in the year, but that has been rectified. If you're on fixed direct debit, then there should be no issue with getting a tax clearance cert. But if it has been stopped, then they need to contact the employer helpline and they'll put a release on it. If they are on direct debit, there should be no issue with getting a tax clearance cert. But it may just have been part of that glitch. So maybe contact the employer helpline and they should be able to release it.
Perfect, thanks Sinead. Paul, I suppose this one for you. A question related, was more, I suppose, a comment really in relation to the proposed increase in our price for 2020. It seems as if now we have been signed up, we're caught to pay the higher price. I'm sure, like myself, many others cannot pass on these extra charges as have a fixed fee being received from the client.
Okay, I suppose I wasn't going to get away with it. No, look, I suppose anybody trying to get through to our support lines back in January or February would have seen that there was a huge delay. It was nearly impossible to get through at times, and we really had to look at our business model. We effectively increased our staff and doubled our staff effectively. So our costs have gone up quite a bit. We haven't noticed it really dying down either. Like PMod seems to be an ongoing, the gift that keeps giving. It's the demand on support is constant. So we've really had to have, a good look at our pricing model. What we've done is we've made it so that it more reflects, I suppose, industry standard, in that, you know, it's a higher price for the bigger users, and that is somewhat justified, and that, and Audrey will probably bear witness to this. You know, a large employer has a big problem with their file or the submissions. We get in the backup, we have to fix it. It can take a day, 2 days for us just to fix that alone. So look, it's our first price increase in 6 years, so it's not something we're going to be repeating, you know, anytime soon. So apologies if it does put you in a position where you can't pass it on to your client, but I mean, I think we're still quite reasonable in comparison with the rest of the industry.
Okay, so somebody's just saying regarding this point, which I think was where we talked about the duplicate submissions to revenue, just if revenue is busy, it comes back saying not submitting, but they actually do have it. So this is more, I suppose, where revenue are actually down. And I suppose that's our safety net, that we use the same line item ID. So actually, when, even though it looks like it hasn't been sent,
yeah, they do try to resubmit, yeah,
it'll be rejected.
And the same with, they're going to check revenue record in the utilities menu, or it will come back with the acknowledgement ID against that, yeah.
So again, I think, Sinead, this is just more a comment or some feedback. Not clear on Ross whether a liability has been paid already. I think revenue need to improve their interface on this.
I think some of the issues around this are because people maybe are paying, and, you know, maybe by, you know, direct debit or setting up a standing order or whatever, and it won't come out of the bank until the 23rd of the month. So while they've gone in and they've clicked payment or make a payment, it doesn't actually happen, unless they're actually physically doing an actual payment there and then. It doesn't happen until the 23rd of the month. So they're not going to see paid on the system because we'll never take the money until the actual due date. So I think that might be maybe causing some confusion there, but we have been taking feedback in terms of how Ross presents the information, and we have been looking at it, and I know we have some additions and fixes that are currently under development. So we are trying our best to make the Ross screens as clear as possible in terms of has the payment been made, or is there a payment due to be made, you know, but you've actually clicked it. So we have looked at it, but I think a lot of the confusion is because they're doing it in advance of the 23rd, so it's not actually showing up as paid.
I think there's also, yeah, I think there's also just an issue there as well. And again, it's how it looks when you go into Ross. You know, if the payment has only been taken quarterly, but obviously you're making the submissions each month, so there's a liability. So it looks like the returns haven't actually been paid, but they actually are set up for the quarterly payment. So it is how it looks. It just looks, and probably something that maybe if there could be an extra, you know, line item or something showing on the charges and deductions page in Ross for agents, it would probably be very useful.
You can't see a pending payment if you.
Sure, exactly.
Yeah, so that might help.
Yeah.
Okay. So you'll take that feedback.
We'll take that back, yeah.
Sinead, this is another one for you. I had an employee who was USC exempt in 2018. Even though their earnings in 2019 exceed the USC exemption threshold, the RPN still has them as USC exempt.
So the RPN is based on their 2018 earnings. So they were exempt in 2018. So if they know that they're going to exceed the threshold, then the employee should contact us. So the employer needs to tell them to contact us because their earnings are going to exceed the exemption, and then we'll make sure that they're not USC exempt. And that's the way it's being built.
I can understand why somebody might have expected that to change, you know.
Yeah.
With real time information.
Yeah.
And it's certainly something
as well to know that it's not automated.
Yeah, it's based on their 2018 earnings. Yeah.
Okay. There's a couple of questions around out of sync payrolls where they're on the wrong week number. And maybe people wanting to know what they should do about it. So, I mean, I know last year Revenue gave guidance on aligning their payroll before the end of the year so that everybody was ready for 2019. There's a couple of people saying that they're out of sync now, and what should they do? If you have any advice, or Sandra, if a client came to you in this situation, what would you tell them to do?
I don't know if you want to hear my answer.
This has been recorded.
I close my ears.
So I think for the most part they're a week behind, you know.
Yeah, well, I mean, they've got to look at that in terms of their business process, and really they do need to have it as aligned as best as they can in terms of the payments, because obviously it's on or before, so that's maybe going to cause them a problem.
This is more when they're on the wrong week number, so their pay date may be right, but they're not reporting it. On the payroll, they're on a wrong week number.
Yeah.
Actually, even though pay date couldn't be right, actually, because we've that locked
No,
down.
they'll be on the wrong,
I think there's a lot of confusion where people are reporting actually the period ending date instead of the pay date. You know, so they're paying up to last Friday, and that's what they have down as their pay date. So actually our software doesn't know there's an issue, and you don't know there's an issue, but the client does, you know.
So what, do nothing? It's a no, is it? The best way.
Because I'm not sure if Revenue allow, you know, the steps that they gave last year. I'm not sure if they're really allowed to be followed this year, like a 0 week or something to align.
I haven't actually even asked about that, but I can certainly take it away and we can see.
Just to see if there is.
Yeah, and we can come back with an answer that maybe you can circulate then.
Perfect. So again, this is just a question really around somebody saying that they're paying, it's just basically a query on the pay date that they're paying, if they're actually paid on the 27th, but the payroll liability is the 30th. What date you put on the pay slip? So I suppose pay slip is always the date the money is made available to the employee, regardless of when you're paying for it. So Sinead, a question for you. Can we assume as an employer that we're not making any mistakes with PMod if Revenue have not told us so?
No.
Because you wouldn't necessarily know.
That's the easy answer. No, because I mean, we may not have looked at that particular employer because maybe, you know, everything has come in seamlessly, it's all being processed, the employees haven't contacted us, but we will be doing reviews. So what I would suggest is that they reconcile their return on a monthly basis and make sure that that's correct, and that they are applying the correct RPNs, and that they look at if somebody should be USC exempt or should be paying USC and maybe they have the wrong characteristics in. So just to make sure that they're doing their own in-house checks, I would say, so that at least they can stand over that they have actually, you know, gone back and looked at it, reconciled it, and that they're happy with what's being submitted.
Another one for you, Sinead, sorry. Are revenue going to issue penalties for a payroll that is continually being corrected for errors being made in the payroll?
I suppose, as Paul touched on, the penalty regime has always been there and it's in place, and it is €4,000 per event. So if there's something incorrect, there is a €4,000 penalty, which hasn't changed, but at the moment it's not something that we're actually applying. So what we've been trying to do is assist and make sure that employers get things right, they correct things now before that penalty regime actually kicks in. Where somebody is going in making genuine corrections, that's not going to give rise to a penalty. Penalties are because somebody is, for want of a better word, abusing the system. They're not reporting the information correctly. They're not applying the correct tax credits and rate bands, even though they were available. So you have to look at what the nature of the correction is, and where somebody has, incorrectly maybe fat fingered to zero or hadn't included something and they've gone back and fixed it. Those types of issues will all have to be looked at.
Like even the Swiss one, the Paul mentioned, that was a mistake.
Exactly, and it's a genuine error. It's not where somebody was purposely not trying to pay the tax, and that's what you have to look at.
I suppose the one that most bureaus be worried about is, I suppose you back this up, Sandra, where the client is not giving you the right information or changing the information 2 weeks after the event, maybe.
Yeah, and that is the case. I mean, we've certainly had circumstances where we're getting the information on a weekly basis, we're processing the payroll on that basis, then we happen to get in the bank statements and we're doing the VAT return and you're checking it, and it turns out it's different than what we've actually sent through.
Yeah, and I suppose that's back to, trying to help the employers as much as possible to understand the need for the accurate information, but that penalties will be coming down the line, and that they need to be more aware of what they're sending to their accountant or to their payroll bureau, and making sure that it is correct, and that going back and correcting it, while they can do it at the moment, it's not going to be an available facility going into the future.
The penalties really, they're huge.
And the penalty is huge, and I suppose that's why we're trying our best to get employers to change what they've been doing and to come on board and become compliant in the process, because we don't want to be hitting employers with these penalties, but we may have no choice where the behaviour continues.
Okay, Sinead, you can have a little break. Somebody's just asking, will you ever be able to pay different employees on different days in the 1 week? So I suppose this isn't an option that's available in Tesora's Payroll Manager, but certainly in BrightPay. You could have 10 employees on a different pay date for well, I suppose only 7 days a week. But BrightPay caters for different pay dates within the same pay period. So hopefully that helps. Comment to Ross, the message your payroll will be available from the 5th of the month. This is of no benefit. It would be if it provided a link to where I, as the employer, can make the payment.
Payroll will be useful from the 5th of the month. There's no benefit.
What exactly does that mean?
I'm not really sure what they mean, as I, the employer, can make
the 5th of the month is when the statement becomes available.
Yeah.
I think what maybe they're suggesting there is that even if that message is there, that you can accept obviously after the 5th of the month, but that if you can get a direct link from there to go straight towards making a payment at that particular point in time.
Okay. Well, I suppose something we can take away and have a look at. I mean, Audrey, you can forward on the questions.
Absolutely.
And we'll certainly take them back and raise them internally in terms of development.
Okay. Ross Digital Cert. I have at least 10 certificates, but none of your notifications advised me as to which certificates needed updating. Can notifications append, say, the last 3 digits of the employer registered number?
Again, I'm not that familiar with the actual Ross side of the house, but in terms of the notification, again, if that's not happening, we can have a look at it, because if it's not clear which cert needs to be appended,
what's actually, I think what is being referred to there is where you have the one PC, but you might have 4 or 5 different companies set up on it, so you have 4 or 5 different digital certs on it. You're getting the notification to say that your cert is due for renewal, but I don't know whether it's in relation to company A, B, C, D, or E.
Okay.
And
again, that's something I can
trying to figure it out.
Yeah, I can send you
a support desk.
Yeah, so what they're suggesting there is that if you had that it's, you know, mentioning the last three
The last
digits
three
of the
digits,
registration number, at least
Well,
you
we
know
can
which
certainly
company it
take
is
that
that you're
away.
trying to update, yeah.
Okay. Will agents be able to rely on ROS Form 11s to draw on the employee pay summary, i.e. P60 replacements? Many taxpayers, especially older taxpayers, may not be sufficiently tech savvy to be able to obtain the summary themselves.
Yeah, so anybody that's not E-enabled, they'll be still able to contact us by phone, come into the public office, and we'll provide that P60 to them. So, you know, they can contact us, we'll post it out to them. So there's no issues there. If they're not tech savvy, they'll still be able to get the P60 replacement.
I think what they're looking at there is, as from the accountant's perspective, that if they're preparing the Form 11, can they rely on the pre-populated information that will
Yes,
show
they should be able
in
to.
the Form 11? And I suppose that would apply for employees, not necessarily for directors.
Yeah.
Ian, you thought you were off the hook there. Can employees in the same department see annual leave already requested by others in that department?
No, they can't. This is kind of GDPR restrictions. Just certainly the employer can before he approves that, but not on an employee basis. Yeah, sorry about that.
And Ian, another one for you. When an employee leaves, does he or she have access to their records, e.g. pay slip, statement of yearly income, so anything, I suppose, that's their online portal?
Yeah, yes, they do. And normally the terms, the length of access time can be determined and agreed between the employer and the employee. And then once that date is reached, the client can just terminate the access to connect for that employee. Yeah. So it gives them time, a certain number of days to download all their stuff.
Yeah.
A good few payrolls out of sync, actually, looking down. Question, another one for you, Sinead. Question for revenue. One of the most frequent questions I'm asked is, are there any plans to allow Med 1 and Med 2 claims to be uploaded in real time rather than having to wait until after the tax year end?
Yeah, I suppose it is something that we're currently looking at in terms of how can we make the health expenses claims, you know, be more beneficial for the employees in real time. At the moment, it's still an end of year process because this is our first year of having real-time information. So in order to be entitled to a claim, we need to know how much pay and tax the person has actually paid. So we're currently toying with the idea of maybe being able to do a half-yearly return. So you might only be able to claim up to the amount that you have paid within the 6 months. So they're all ideas that we're currently looking at, and hopefully we will be able to develop something that will allow it, because really we'd like people to be able to get the benefit of it in year, particularly where they have, you know, extensive medical expenses, maybe they're paying for nursing home fees, etc. So it is something that we're looking at, and we have a couple of ideas that we're currently trying to bring to fruition, but it's not there yet, but it's definitely something that we are considering.
Perfect. Ian, another one for you again. Just wondering if the BrightPay Connect feature can be used as a rostering system also.
Rostering?
No, we don't. We don't actually have rostering as part of it.
Sinead, do revenue intend to reinstate an option for payroll agents to easily see a list of outstanding returns or liabilities by clients without having to view each client's revenue record individually?
Yeah, again, that's something that we're looking at in terms of functionality. I'm not sure that there'll be something there by the end of the year, but it's certainly something that we're looking at developing, because it has been raised that it's not easily identifiable. So again, it is something that I think it's been raised.
Highlighted it earlier in the year, and it is still an issue.
So it is something that they're looking at, but again, it's a development that's required. And we had other developments in train, so you know, we've had to kind of put some of them, move them down the priority list a little bit at the moment.
Perfect. Revenue are putting a lot of employees on week 1, month 1, and then not putting them back onto cumulative. So taxes are not correct. How can this be corrected? I suppose you must have a reason.
There's a reason for putting them on a week 1 and month 1, and generally it's because they may have been in receipt of disability payments or something has happened in their own circumstances. So what we would suggest is, if that week one, month one is incorrect, that the employee should contact us and we'll look at the situation and then rectify it where it's rectifiable at that point in time. But sometimes, particularly with the disability payments, they are kind of open maybe for 6-8 weeks. So it's not possible to put the person back on until that claim has been fully closed and processed by the Department of Social Protection.
Paul, why is Thesaurus Payroll unable to handle 2 payment dates in the same calendar month?
2 payment dates. Yeah, well, I suppose it's just a limitation in
the programming language
at the moment. It's one thing I suppose I would have a look at, but I know, as you say, BrightPay does actually handle that. And the transfer from Thesaurus to BrightPay is actually quite straightforward if anybody wants to do that and be able to have that capability.
Okay, thank you. Somebody's just saying when they take on a new employee and they're on a cumulative basis, but they're due a large tax refund from the start with the new employer, but they don't wish to pay the tax to the employee as they may not have the funds. I suppose this is not something that's changed. This has always been
the case. Yeah.
And I mean, it reduces down the employer's liability. So
yeah.
Do you put it out a week, 1 or month on there? I mean, there's no other way for the employee to get it back in year.
No.
Will end of life of Windows 7 have the same impact as when using Windows XP?
Will it have the same impact? Well, the only problem with XP was that the particular security, I forget the exact terminology to be honest with you, but it wasn't available.
The TLS, no?
TLS2 or something like that, yeah, wasn't available in XP. I suppose as security requirements evolve, I mean, eventually Windows 7 will probably have an issue in that there won't be any more upgrades of the browser for those computers. But when that is, I actually don't know. It's a couple of years away yet.
I didn't know there had been anything on it actually until I read that, so I'm not sure.
Yeah, Windows 7 it's so widespread really that it's difficult to see that ending anytime soon.
Sorry, just more payment dates with people, I suppose, reporting the period end and date. But so, I mean, it's wrong. It just has to be the pay date. Somebody's just asking, Sinead, how will additional payroll to proprietary directors be dealt with, e.g. additional pay for year end 31st of December 19, not paid until 2020?
Well, it's when it's paid, it's reported to us, but if it's appropriate to 2019, the directors' provisions haven't changed, so it can go back into their 2019 Form 11.
Okay.
It's still accrued in the accounts then as well.
Somebody's just asking, are employees not responsible for ensuring their tax credits and USC rates are correct?
I suppose it's up to them to make sure that they are getting whatever credits they're entitled to, but they don't always do that. So, I mean, we will give the standard credits and rate bands, but again, because of the USC issue in terms of if they were exempt last year and now suddenly their income for 2019 is much greater, then the employer will know that and the employer can advise them, and they should contact us. But again, a learning process and getting employees to take responsibility for their tax, which is what our programme is currently about, getting them to manage their own tax affairs a little bit better and to understand what's actually involved. And I suppose the sessions that we're doing actually go into how tax is calculated, and it's a very much a ladybird style session. So it's really, you know, how is tax calculated, how is the USC calculated, what should you do if there's an issue, all of that is covered. So I suppose it's a change of mindset, but yes, they are ultimately responsible, but I suppose where the employer sees something, they can bring it to their attention and maybe get them to contact us.
So those employees who have underpaid USC because, say, they're on exempt where their earnings are over the level, their year-end statement effectively will show a liability to USC.
It will, yeah.
If they don't log in
will they know? or-
We will adjust their tax credits going forward.
Okay,
So we'll collect it by reducing their tax credits.
okay. So there'll be a double hit effect, well, as far as they're concerned, it'll be like a double hit the following
Yeah.
year.
Somebody was just asking, will revenue be doing any sort of equivalent to a P35?
It's 12 monthly returns. So there isn't an end of year process. Every month stands on its own. So it's monthly reconciliation process.
Sinead, question for Sinead. RPN tax credits for proprietary directors are wrong in a lot of cases. Revenue are given PAYE tax credit rather than the earned income tax credit. Is it wrong to ignore the RPN and calculate tax due based on the lower earned income tax credit? Emails have been sent to, sorry, this is quite long. Emails have been sent to revenue through my inquiries, requested that the RPNs be changed. No responses have been received. What is the correct course of action to remedy matters in this case?
Question.
Well, Sonia, you probably have experience of that.
Yeah, we've had our trials and tribulations with it. It's been very time consuming actually to try and deal with it, because while a lot were right, a lot were wrong, and we have had to deal with it by, effectively sending the requests to revenue to get the to get the tax credits corrected for the individuals.
Yeah. I know in some
question.
cases it was because they weren't set up correctly as well. They may have not been marked as a director, proprietary director, etc. In other cases, there were just issues with how the system was giving back the information. It is something that we have looked at though, so I mean it should be clearer now, but I suppose where somebody knows that the RPN is incorrect, they should contact us, but they can obviously apply the correct one, but let us know that they've done that, so that they have actually operated what they believe to be correct rather than what's on the RPN, and send us an inquiry to that effect.
I suppose in that particular case, there'd never be any question of a penalty for somebody actually applying what they believe to be the correct.
No,
Especially when it's low.
Especially when it's low.
Exactly.
Yeah.
Yeah, like what we've done in some of the cases is if we have the PAYE link, we've kind of gone in it nearly as if it's the My account
Yes.
to try and correct it within there, but obviously that's not a fully automated procedure, which I didn't realise obviously at the time, but I'm aware of it now since late last year. But somebody has to manually still pick up that
and actually process it.
So it is, it's a slow process for revenue. It's a very slow process from our side as well. So certainly any improvements that can be done to overcome it.
Yeah, I know, and I know it's something that we were looking at, but I think in some cases it was definitely because they weren't set up correctly in the first place, where the director marker wasn't actually set up for them.
Okay. This is for revenue again, Sinead. As an agent, I get a monthly message to agent inbox that the monthly statement is available for all clients who are registered as employers, even those for whom we do not do the payroll. This results in a large amount of unnecessary inbox messages each month, which have to be ticked and deleted. Is there any way to reduce that?
I don't really think so. I
Did we
mean,
get correspondence for anyone you're an agent for, whether you did the payroll or not? Like, do you?
I mean, I know the RAS notifications are huge, and we have certainly tried to prioritise them with a little asterisk where they're PAYE, related. But
I suppose you'd have no way of identifying who's doing their own payroll if you.
We don't have any as agents either. Like our inbox, you just couldn't go through the number of notifications daily, because again, it's not telling you whether it's for client A, B, C or D. So you have no idea who the notifications are.
Because they're saying they're getting them for people who they don't even do the payroll for. But
but that's probably because they're down as agents and they have access to their PAYE record.
Yeah, so the only way of, I suppose, reducing it is if they don't have access to their PAYE, then they won't get it. Kind of touched on this already, but what employer reports are there at year end? So you're not going to have any, just 12 monthly statements.
The reports that you should need should be available obviously from the software.
Absolutely, yeah. So if we're trying to do a reconciliation
and obviously the
for your
account.
accounts. Exactly.
So somebody's just saying, thank you for doing the seminar. For revenue, I'd like to flag the notifications, i.e. the emails that are received. We have numerous companies, and without them, it's the same again. So,
And it's certainly something I'll bring back, and I have brought it back before. but I will certainly bring it back.
It's just another one about the directors, yeah, and the tax credit.
I see what there that somebody has just told me that Windows 7 end of life. It's the 14th of January.
14th of January 2020.
I suppose that's when they'll stop issuing
The support.
upgrades and support for it. But it'll continue to work, obviously, for.
Yeah, but we don't
a
foresee
while.
any issues with.
No, but I still, well, we'll have to check that out.
Yeah.
I didn't realize it was so soon.
Yeah.
I mean, obviously our software works on Windows 10 quite well as well, so.
But yeah, if there's no more updates after that, you know, I suppose.
I just have to see exactly what that means, yeah, and I'll check it out and maybe put the answer up on the website, yeah.
Okay. Somebody's just asking, Sinead, will revenue fix or improve the system of allocating tax credits bands between spouses? Is there an issue there, or should that?
I'm not aware of an issue as far as I'm aware of where they're jointly assessed and they're on my account. They can go in and, you know, assign credits. Generally, the system will assign what we would see as being the most beneficial credits if they haven't done anything themselves, but I wasn't aware of an issue, were you?
There can be, especially if there's more than one employment.
Okay,
Yeah.
okay. I suppose
Again,
if
it
they're
just
having
doesn't-
problems,
yeah,
they
doesn't
probably
seem to
need
be
to
fully
contact
automated.
us.
And
Yeah.
I know, and I don't know what they've improved since, but no, towards the beginning of the year, I went in there to try and do something and I got very confused
Okay.
about the screens. So, yeah, but that doesn't necessarily mean everybody else will be confused.
Yeah, and I mean, we have tried to simplify it as best we can in terms of that allocation process. But I wasn't aware that we have been getting sort of issues with it, but
Yeah.
maybe there are, as you
From
said, where
memory,
we have
it's
other
a while
employments.
since I've actually done the procedure myself for somebody, but I know what I ended up having to do was it kind of brings you to a screen where it says, well, tell us how you want it allocated,
Yes.
and then you have to submit. So you can't actually physically do it yourself. You have to send the request, and obviously it takes
And that's
time to
because
come back.
it's somebody is processing it. So again,
I
it's a
know,
little
that's
bit
what I'm
like
saying. I think
what
the
you were
question there
saying.
is to
Yeah,
look at improving it, that we can actually, I
Yeah.
suppose, effectively
yeah, well,
do
I'll
it all
certainly, I'll
ourselves.
take that away.
In real time,
Yeah.
as well,
Sinead, somebody's just saying that they have the Department of Justice and Equality. Have you had any talks with them? Basically asking for a copy of a P30. Are they not aware that they're gone?
No, and we have been dealing with them in relation to employment permit applications, and they do know that
Okay.
there isn't a P30, and what they'll be getting is a statement, and like a P30 would have been showing everybody that they have in their employment, you know.
Well, the
And the
P30 would be
P30
just
total.
their summary box, exactly,
Yeah.
just an amount. So that's not really relevant for an employment
Yeah,
permit
but you'd have to assume
application.
it's your monthly statement.
The monthly
would
statement, and
be
we
what they
have
would be
been
looking for.
engaged with them, so they know that the P30 isn't there. If they're getting persistent queries on that, they might let us know if they're not accepting, you know.
Somebody's just saying, for an employer on an annual return, why do revenue issue an interim refund if a month shows up as an overpayment?
Employer on an annual return. Revenue issue, interim refund. I'm not sure.
Okay.
It shouldn't be happening.
Shouldn't really be
No.
happening. Again, maybe if they want to send you some details, or we can go and have a look at it and see, just in case there's a glitch in the system.
Okay. There's a lot of questions around the notifications in Ross, which you're going to take back.
Yeah.
And the out of sync payroll and pay dates, etc. But I think that's pretty much it. I will go through the questions myself later on and follow up on any. If I find any that we kind of didn't get to, you know, I'll follow up on them. So.
Yeah.
Okay.
Okay, well, listen, thank you very much.
Thank
Thank you,
you.
Sinead, for coming into us, and Sandra for helping out, and Audrey, as usual, for trawling through the questions. So thank you once again, and talk to you soon.
Thanks everyone. Bye.